Today, I wanted to talk about what's been branded the mini budget and how it will affect our investments. The new Chancellor, Kwasi Kwarteng, has outlined a package of measures designed to help boost the UK economy, in the biggest set of tax cuts in any budget since 1972. It's being called the mini budget as we don't usually have these sorts of announcements made outside of the annual budget. These measures have some clear implications on the stock market. Just today, we've seen the pound drop to its lowest level in almost 40 years.
Ouch!
My portfolio today has dropped £3,500 as the FTSE has plummeted. Woohoo! But more importantly, what does this mean for the long term? And how are these changes going to impact our portfolio? Here's my opinion on what I think we'll see happening next. The unfortunate thing about the government plans is the amount of borrowing it's going to take to do it. Over 40 billion into the economy at a time when we're already worried about inflation. The Bank of England's interest rates are increasing to help counter this, so only time will tell if this will be beneficial. But there's no denying there's a lot of risk that they are taking. Property was quite a huge one for me as I have quite a big stake in the UK house builder Taylor Wimpey, and I'm currently in the process of looking to buy a property. There's been a rise in stamp duty, which is great news, double the limit. At the moment, stamp duty started from 125,000, which will be doubled to 250,000. For first-time buyers, the threshold is heading to 425,000, which should help people living in more expensive areas. This reduction in the stamp duty will make the house buying process cheaper. This is a bit of an odd one because it's good in some ways. It's cheaper to buy, but boy, I wish there were more houses on the market. So I'm not 100% sure if it was needed, and it's a bit of a catch-22 situation. I almost don't want people to be buying houses quicker. I know just last weekend I looked at one, it had gone within 3 days before I could even book a viewing. One consideration to bear in mind is that interest rates will continue to rise to tackle inflation, which could go against the housing market. But I still think rates are historically cheap, and they're not going to be anywhere near the scary 10% rates that have existed previously. They're also considering removing restrictions on affordable housing, making it easier for it to be created. But this should be good news for property stocks, home builders and estate agents, who lately have faced a lot of negativity with the higher rates and the economy performing poorly. I think it will definitely lead to an increase in demand for houses in a market where shortage is already an issue. Good news for your booze, as the government has scrapped plans to increase duty on alcohol. So this should be beneficial to the drinks and the pubs industry. In a boost that could benefit the travel and retail sector, it's been announced that there will now be a VAT-free shopping scheme for tourists. This means that visitors to the UK will be able to get a VAT refund on items purchased and then taken abroad. This applies to items bought on the high street and any departure locations like airports and train stations. In April next year, the basic rate of income tax will be decreased from 20% to 19%, a whopping 1%. They're scrapping the higher earners 45% tax and it's instead going to be 40%. Across the board, this will mean everyone has more money in their pockets, although some will argue this should be the other way round. This will likely help a range of industries. I think this is a weird one because I do think how many of those people paying 45% are actually really paying it. I have a feeling that the real high earners are in some kind of tax avoidance scheme and it really hits the people in the middle worst. But there's no denying that all round this will give people extra money, which will likely help a range of industries. I think primarily they're nice to haves, i.e. people spending it on a holiday or luxury goods that otherwise they might have cut back on. Other people may use this to invest, which could see a boost to trading and broker stocks. A big push coming from the government is to invest in the economy, which is much needed, especially with the situation we're in with the price of the pound and being post-Brexit. Planning rules are looking to be swept aside and companies will be able to write off investments in plant and machinery in specific zones. A clever way for the government to drive investment into needed areas. Those included are sites at Coventry and Somerset, which are hoping to attract investment in gigafactories to make car batteries, industrial areas around existing car plants in Ellesmere Port and Sunderland, airports at Teesside and Newquay, and urban centres including Blackpool, Plymouth and Workington. Businesses will receive what they are calling accelerated tax reliefs for 10 years on structures and buildings too. There won't be any stamp duty on the purchase of land or buildings in these zones for development. Good news for developers, but unfortunately that doesn't extend to people buying houses. But hopefully the new measures they're putting in place will help. Fingers crossed, this should be a good thing for the UK. Encourage more investment into areas that need it the most. So it may be well worth exploring businesses that operate in these areas, as they could see a significant boost over the coming years. The Chancellor has also announced an extension to the relief on venture capital trusts and enterprise investment schemes, which had been set to be scrapped. These schemes will no longer be scrapped, encouraging more investments into the UK, and they could remain an efficient tax vehicle for investment. We still don't have full details on how this will all be implemented, as it's just been released so quickly. Hopefully this will hedge against some of the uncertainty that's been dragging everything down so much lately. But at least now we've got some idea of what plans the government has in place, and it gives us some idea of where things are headed. Thanks for watching. Let me know if you'd like to see more of these and keep you guys up to date. If it was useful, please drop a like to let me know. If it wasn't useful, drop that dislike and let me know what I could do better. And if you haven't already, get your free crypto card from CoinJar, link down below. And make sure you check out this video, because if you haven't seen it, I think it will really help you. And I will see you over there. Thanks.